Well, welcome and good afternoon. And I hope you are staying dry. We had a little bit of flooding up in my area, as I'm sure you saw. We made national news. Oh, goody! And as Gabby said, I am Loree Bebber. I am the marketing director at Cal Coastal. I've been there a number of years. She did like the first half of my presentation already, telling you all about me, but that's okay. And what we're going to be going over today is accessing capital. And what that really means is what you need and how you need to access it, and what you need to bring to someone to, in fact, access it. And then what we have as far as the Cal Coastal products. And that's basically what I'm going to be doing for the next hour. And I know Gabby had said that if there's any questions, please let me know, and I can try and answer them, or tell you that I'm going to be covering that in a little while, something like that. So here's another picture of me. I seem to have quite a few of those. Yes, I'm marketing director. I'm based out of Salinas. I have my Salinas office. I work really across the California footprint, because some of my programs I can go anywhere in California. Other ones are just Monterey County, just San Benito County, I have some that are in Fresno County, down in Fresno County. I don't know if that's the county, but anyway, that is what I'm looking at doing today. And how, if you have any questions during the presentation, let me just have you go to the next. Thank you. You're actually all muted, but if you want to ask a question, we ask that you go into the Q&A. And this is being recorded. And if you did register and you attended this presentation, you will get a link to the recording. So off we go. So the presentation, you did the next one. Okay. So we are dedicated to providing financing to small farmers and businesses throughout California who lack access to capital and technical assistance. We have 4 designations which allow us to do this. We are a financial development corporation, which is within the state of California, and that allows us to do and fund businesses that wouldn't be able to qualify for a bank loan. We are a community development financial institution. That's through the U.S. Treasury, and that is, again, that allows us to do a different kind of funding, which is the SBA, which is the Certified Development Company, and our local loan fund administrator, which we're able to work in San Luis Obispo. We have a grant. We actually have a grant funded to us to get funding out to small businesses that need it through San Luis Obispo and Fresno counties, and also Monterey County. And we're working on those every day to see, where else we can help to get money to the businesses that need it. On the next slide, it talks about Cal Coastal. We're actually a nonprofit corporation, so we're not a bank that has to satisfy its shareholders that they're making enough and that type of thing. We do operate like a commercial lender, but we are not under the same constraints as a commercial lender. We provide direct loans and guarantee, and then we guarantee bank loans. So if a bank is willing to do a loan to you, but they feel like the collateral might be like a little bit not quite enough, we can guarantee that loan to them, and a lot of them will then make the loan. So there's different kinds of financing available. We operate statewide on some programs. Our loan range is from $5,000 to $5 million. It depends on what you're using the funding for. And then, of course, everything in between. We can, the loan funds may be utilized for purchasing buildings, machinery and equipment, inventory, or working capital. And that is, that's kind of an overview of what we do. I think the loan products are, we have a direct farm loan, and that's for farmers either starting up or increasing their acreage, or having more animals, that kind of thing. So the farm loan can be used for a number of different things. The Jumpstart loan is a $10,000 loan, and it's basically just that, to help you jumpstart. Maybe you're in a little bit of a slump in your business, or you are trying to start the business and need a little bit of capital. The Jumpstart actually is for $10,000 or less. Excuse me. We also have the SBA 504 loan. That is for buying your own building. So you're up and operational, everything's going great. You're making a monthly rent payment, and you decide, wait a minute, what I really want here is to be able to put money into a building that is mine, or that I'm buying. That's the one that goes up to $5 million. Excuse me just a moment.
No problem, Loree.
I'm having a little attack here. Okay, I'm back. Sorry about that.
No problem, Loree.
Okay. So talking about the 504, that I said it's the $5 million. The SBA microloan is $50,000 or less. The Community Advantage loan is $250 or less, or $350 or less. And then I talked about this California state loan guarantee. We can go up to $5 million on that. And then we have a Monterey County, which doesn't pertain here, but, and then intermediary relending. And what that is only for rural areas. And so we have a, we have to put the address in and figure out if it is in fact a rural area, or they consider it a rural area. So, so now the meat of the whole project here is what I'm going to talk about is some critical financial management tasks for success. What you need to know, how you need to know it, and what a banker or a lending institution is going to be looking for when you in fact go in and say, I need a loan. I need to have access to some capital to start, grow, or replace equipment, that kind of thing. So what I say first is, if you're in business, you're going to want to know what is some of the critical financial management tasks for success is know your profitability. What does that look like? What are you, what you're budgeting, your bookkeeping, there's a balance sheet, and I'm going to go through that with you, profit and loss statement, and that's also referred to as an income statement. Forecasting your growth and associated cash needs, because a lot of times businesses, when they're looking for funding, it's because they're growing too fast and they need money now for what's going on in the future. And so they have to be able to show how could you possibly do this? Well, let me show you how. And that's how that, and then we say that's what the business plan's about. So cash flow projections, and then these are the things that will be needed for applying for a loan, for applying for an investment. These same sorts of things, if you were going for an investor, they would also be applicable. And then the next one, the financial statements, and that's what you'll hear is people will say, oh yeah, I'll need your year-end financial statement, or I need your year-to-date financial statement. And what they're referring to is that, because is the financial health and cash flow of the business. And what they're referring to is they want to look at your balance sheet because that's going to give them a picture in time. This is the balance sheet is just as of this date, this time, this is what my business looks like. The profit and loss statement, typically on the same date as the balance sheet, is going to show profit and loss from some point in time to another point in time. And then your cash flow projections are based on this profit and loss statement. I feel I will be able to have this kind of cash flow to definitely repay your debt, as well as maybe hire more people, like I said, get some new equipment, whatever that looks like. Okay. So balance sheet. Balance sheet is going to, like I said, it's a snapshot of the business at a specific point in time. And it lists your assets and your liabilities. And the totals on both sides must be the same. And that I know is an interesting, that is an interesting issue, because a lot of people are like, but I don't know how it gets to be the same. So what that looks like is you will have, your cash, and that's basically, what do I have in the bank for my business? You don't want to mingle personal and business and that kind of, so how much cash do I have in my business? How much in equipment do I have? What's my dollar figure there? And then what's the inventory? How much do I have of inventory that I'm selling? And that's going to give you a total of your assets. And then liabilities, you say, okay, well, I have a loan against my equipment for $20,000. And so, or I'm sorry, $20,000. And so so what happens is my owner equity is 35,000 to be able to get to 55,000. And that's your total for your assets and your liabilities. This is, these forms are easily found on the internet that that you can fill in. And a lot of times if you're doing projections, you're going to fill it in and then you're going to say, okay, but what if I do worse, or what if I do better? And it will all recalculate everything. So, so I do like the computer sometimes, not always. But that's pretty much the balance sheet. And then there's the profit and loss. And most people think that this is the most important report, and you can get it from your accounting software program. And same with the balance sheet, but it's all about what you put into that. This actually measures your revenues and expenses during a set period. It tracks your profitability, whether the business is making a profit on what it sells. And how is that used? Because the bank is going to ask you, any lender is going to ask you for all of these things, and what is it going to tell them that they feel they need to know? It basically shows them how successfully the buying and selling process has been managed in your business. It also measures the ability of your business to grow, repay the debt, and support you. So if you are, looking to get a loan, you're going to want to make sure that, either your business can afford it now, or if it's growing, to be able to show that and show it in a, graph or numbers across the bottom showing that it's going up, that kind of thing. And then the ability to repay the debt that you're looking for. I see a lot of people that, they come to me and I ask them tell them what I need. And then they go, well, I know once I get the money, I'll be able to pay back the loan. Well, we have to show how you're going to do that and what that's going to look like. So that is a very, it's a positive to be able to, kind of sit back and take a look at it. And it also measures the ability, I said that. Okay, so, and knowing that it's important to know if you've made a true profit, and that's what your financial statements are going to show. A quick little profit and loss statement. Many people's are multiple different accounts, that kind of thing, but it's basically your sales less your cost of goods equals your gross profit minus your overhead. So that's all of the different, the rents, the, the salaries, postage, the internet, everything is an overhead cost if it's not a cost of goods sold. And then you get to your net profit. So that's what you're looking at, your net profit. And excuse me, the cost of goods sold is your total expenditures for inventory items which customers buy. The cost of goods sold consists of the cost of purchasing the items, freight and manufacturing costs, modification costs, and packaging. For services, this is the cost. This is the cost of providing the services, including labor, materials used, and transactions. Sorry, I lost my place. So what they're saying is the cost of goods sold is really the cost of that item to manufacture, to get to the country, or or to make, or to what does that look like? And that's going to be your gross profit when you take that away from the sale. So your sales number, cost of goods sold, and then your gross profit. Overhead is more the generic overhead that says, okay, we're paying the rent, we're doing all of these things, and what that looks like. And so then that gives you your net profit. Now, if that's a positive number, great. If it's a negative number, you want to re-look at certain things and make sure that you're putting yourself in the correct position. The next slide shows you financial statements and cash flow. And it's, the balance of your cash received less the amount of cash paid out during a set period, moving cash in or out of the business. And so that's basically what it is. Of course, doing it is a little more complicated, but cash flow projection is a statement using assumptions to forecast. So you've got company cash flow in and out. And so you know what that is. You're comfortable that your accounting system is working. You know what's coming in and what's going out. And then you can look at your future cash flow during a specific time period. So you say, okay, so that was for the last 6 months. Now this is for the next 6 months. What do I think I'm going to do? Well, I know I have these big jobs coming up, or I know that I'm going to have a big sale. So is that going to change what your cash flow looks like as a projection? And you want to project whether cash receipts, inflows, will be sufficient to cover projected cash disbursements, which are called outflows. And then cash flow is the capacity of whether your business makes enough money to pay all its bills. And that's just right now. Does your business show that you can pay all your bills, pay your staff, pay, whoever it is, and still have funds left? The amount of money that you make or expect to make, which is your cash flow, should be sufficient to pay all expenses and allow a little extra in case something unexpected comes up. And as we all know, those things do come up. And that's kind of the way it is. So So I did let's see, yeah. I did what's called a cash conversion cycle, because a lot of times, I don't know about you, but just reading stuff does not do it for me. And so I kind of did just a little diagram of what is going on. And it's basically at the top here, your business pays for raw materials or inputs. Then money goes out to make the products or designs the service. And then you go over to business sells the products or provides service. Then money goes in, and then the whole cycle starts over again. And so this is the way your cash is going to move as you get it into your business, and how it's going to flow in versus how it's going to flow out. The next one is the next slide is one that is just all kinds of fun. And it's the sales cycle, the cash flow diagram, and it's in a picture form instead of like what I just did in dollar form and all of that. So it talks about the first thing is this is a sales pump, and you get money by sales to customers. You also can get money from lenders in the form of a debt, and then you can get investors, which typically you give up some equity, or investors you could actually have a debt with them, but it's typically an equity position in your company, which means you do give up a percentage of your company so that someone will invest in your product or service. And then you've got your over to the left, you've got your credit, which is accounts receivable. So that's income that's expected in, but it's not in yet. You do have some bad credit sometimes with those, so you don't get all of that information. So you want to make sure that you know who you're doing business with also. You've got inventory. You have that this is your inventory that you're going to sell, and you have issues with inventory. You can have obsolescence, shrinkage, and you never really know 100%, but you want to keep tabs on all of this. Then you have what is your available cash, and then you have your own accounts payable that have to be paid out of that: sales tax, payroll tax, any debts, income taxes, and then leasing, if you're leasing any products. And then you come down to depreciation. And then what's left is what you get to put on your income statement as your bottom line income. And so I hope you got a little bit of knowledge out of that. I know that's a lot of things moving around, but feel free to ask any questions. So I'll go on to the cash flow projection sample, and that's what I was talking about as far as so you have your income statement, and you have your cash flow, and you know what's coming in and you know what's going out now. So what this is a cash flow projection, and any lender, any investor, anyone is going to ask you for that. They want to know what they already know what you have now, but what are you going to be able to do in the future? Now, I know a lot of people tell me, well, how do I know? And I get that, but you are the one going into business. So what is your absolute best idea of what you can make, what you can do? Okay, can I sell 100 widgets a day? If I can't, how many do I have to have in stock to be able to do those orders? What does that look like? So this goes through your whole cash flow projection, and that's your beginning cash. So what your opening balance is, as well as the excuse me. So what your opening balance is, beginning cash, then your cash sales. What do those look like? Your collections on your receivables, because those are not immediate. If you are offering someone terms, then it could be 30, 60, 90 days, whatever those terms are. You've got interest income. So if you've got income, you've got cash sitting somewhere and you've got some interest income coming in from that, that's going to go in there. If you received a loan, so you received a loan for $10,000, that's going to go in on your opening balance, your cash flow projections, because you have that available to you for your business. You've got equity contribution, and that is your own cash. Typically, if you are looking for a loan, looking for, like I said, investors, whatnot, they want to see that you have your own cash into the project. Now, that may be funds that you already put in, or it could be funds that you have to put in for this specific project. So you want to buy a piece of equipment. They typically want to see 10 to 20% down on the equipment of your own funds, and then lend out then they'll lend out the rest of that money for the equipment. Let's see, and then the operating uses and costs. And again, anyone that's lending money wants a very detailed, how much does this cost? Your contract labor, your wages, payroll taxes, rent, phone, office supplies, the day-to-day types of stuff, any travel, insurance, kind of that whole type of, what does it take? How much is it going to cost to run this business? And then you've got your total. Oh, I'm sorry about that. You've got your total operating balance. And then you've also got, you can do this for month one. So when you're starting out, or if not that, month one of whatever change is going to be happening, month two. So you can just see right across, does this make sense for me? Is this going to be something that's positive, or am I, looking to get too much or not enough? And that I see that a lot, where people go, oh, well, I'll make it work with this. Well, let's start out with what you really need and work backwards if we need to. But sometimes you just, you don't want to cut yourself too short, because you don't want to be in the position of needing more capital. So you've got net cash, you've got your non-operating uses of cash, which are your debt service on your loans. If you have any loans, already out that you've expended, you've got equipment purchases, self-employment taxes, owner's draw, inventory purchases, and then you've got your ending cash. Now that's basically what you have at the end of the day after you've used all of those funds for all of the different categories. So one of the things that I talk about a lot is how to improve your cash flow, because a lot of times people really they know that money's going out, money's coming in, but they're not actually really sure where that is, what all that is. And so, of course, some of these are your 30 ways to improve your cash flow. Some of them are just like, okay, yeah, but I mean, they really, it kind of is like, okay, let's see, increase sales and revenues, particularly those involving cash payments. So sometimes you can get a discount if you have, if you order from someone and they give you 30 days or something like that. But if you pay them, in 5 days, you might be able to get they wouldn't, they'd cut off 5% of your cost to do that. There's a lot of that I'm seeing, because people are trying to get their cash in faster. So I'm seeing them making deals, basically. If you pay me, today, then, I'll give you this much off, that kind of thing. The next thing is increased sales. of higher margin products and services. So is there a product that you have that is, makes you a lot more money than say another item? How do we increase the sales on that particular product? Reduce direct and indirect costs and overhead expenses. And, these are things that you look at and you go, oh yeah, that'd make sense, but I don't know how to do it. And that a lot of times is when, the different organizations can come in and help you with that, especially like Gabby and the women's business centers. They can help you to sit down and look at your numbers and say, okay, it doesn't make sense, or it really does, and you are doing the best you can, to find out where you're at. You could defer discretionary projects that cannot achieve acceptable cash paybacks within 1 year. So if there's things that you want to do, but it doesn't make sense right now, then maybe it's not a bad thing to put those off. If it's something that has to be done, like I know there was a lot of vehicles at one time that had to be brought up to a certain code. They didn't have a choice in that. The owners had to bring them up to code. So they weren't going to be able to defer that. And so they looked at different types of items to be able to make sure that those trucks were running legally. Defer discretionary products. I think I said that. Increase prices, especially for slow payers. So what I talked about before, if somebody's going to pay you earlier, maybe give them a little bit of a discount. Kind of going the other way, if you increase prices, especially for the slow payers, that can bring you in more income. Review the payment performances of customers and see if that's still, if you still want to offer them payments or, not. You've always got COD options, you've got other things and now with credit cards being so easily used, maybe that's and that goes into my next one. Be more selective when offering credit. You want to make sure that they're a good, that they're a good credit risk if you're going to offer them credit. If you're not, and these are the ways that you can pay: cash, cash, check, credit card, however that's going to work. Seek deposits. So get deposits up front or multiple stage payments in advance. I typically see this in construction companies or in big manufacturing firms, where you would have a multiple stage payment because, okay, when we get this part done, we get this much money. When we get this part done, so that you are not putting out all of the expense for everything. You are getting paid as you go. Reduce the amount of time of credit given to customers. So if you're offering your customers, 90 days, maybe you look at cutting that back to be able to get more cash in quicker. Invoice as soon as the work has been done or the order fulfilled. I see a lot of people that don't bill until like the end of the month or something like that, where if they billed at the time they sold it or delivered it, or that would get them income quicker than waiting until the end of the month, then billing, then having the people, I have to get it to my billing department or my payment department. Then it could take longer. So yeah, so and invoice immediately online. I'm seeing a lot of that, especially with it's immediate. Here's your bill, and pay it now. And if you don't pay it within 30 days, it goes up to this amount or something like that, so that you're getting your income in a quicker way. Improve all of your systems. Yeah, check your billing and your collection, make sure that that's all working smoothly, and that you have someone doing it, and that it's not just like they'll pay us soon enough. You really need somebody that will call and talk to people about their delinquent accounts. Let's see. Use the 80-20 rule to control your inventories, receivables, and accounts payables. And what that is making sure that you want to have at least 20% of your inventory. You want to have 80% of your inventory, and then 20% receivables and 20% APs, accounts payable. Sorry. And that is, again, just condensing it so you can see what you've got. Improve your systems by paying suppliers and build trust in those suppliers. And I'm going to go through these fast. It gets a little more mundane. Make sure you're looking at all of the reports, your accounts receivable, your aging reports, your payables, and make sure that if somebody is on there all the time and they're a good pay, you want to reach out to them. Thank you so much, that kind of thing. Or if they're not so good, you want to make sure somebody's reaching out to them also and saying, hey, we need you to, pick up the pace here and make the payments on this. I don't particularly, I will tell you, before I started doing SBA lending, I was a collection agent for a company that financed, and they were very a high interest rate, and they had very aggressive collection techniques. I truly do not believe in that, but this was part of the whole thing, so I put it in there. But I do not I don't typically think that's a good idea. I think you get more when you're willing to talk to people and see what they can do instead of being aggressive with it and that kind of thing. Add late charges or fees where possible. So if they haven't paid you, and you have it in your contract that if you don't pay me within 30 days, there's a late fee of, whatever percentage or something like that. Increase your credit taken from suppliers. If people have, if some of your suppliers have said, oh, we'll, we would offer, you've been a really good customer and we'll offer you this. We'll offer you, 5% off, something like that, just because you've been a really good client, or we'll give you longer terms, that kind of thing. Let's see, make prompt payments only when worthwhile discounts apply. And again, that's, I think you should pay your bills on time, and then you don't have to worry about doing that.
Loree,
Yes.
can I interject? I've just got a comment in the chat box from
Sure,
Anna.
sure.
She states, a woman still hasn't paid me for her retreat experience. She blocked me on everything.
And okay. So what have you done to do the, okay, what I would do in my situation, with what I do, I would send a certified letter to what I know as her address, and telling her, she owes the money, and that, I'm expecting it by this date, and that, where to send it.
I actually don't know her address,
Oh,
which is why I wasn't sure, like, if I needed to hire a private investigator or, what I mean? I don't have her
well, and that
address.
comes down to how much you're looking at.
It's
too.
like $700.
Okay, and that comes under small, that comes under you can file a small claims,
Right.
but I believe you have to have an address.
Right. I know where she works, but yeah, I just brought it up because I thought it was funny. I was actually looking up her profile right now, and I was like, if I could just say something, and
Sure.
like, I'm
No,
trying all the things, I'm trying the communication, but it's been maybe 9 months now. So yeah, I've kind of
there's
sort of
nothing
accepted it.
saying you can't send it to her work.
Right.
I
That's
would
true.
I would mark it confidential, so that I mean, I don't know if she has her own business or if she's working for someone else, but
It's a restaurant, so I can maybe send it to the restaurant.
yeah.
Okay. Well,
And
thank you.
yeah, I would just do that, and then that way you at least have it on record that you've done something, you tried to get it, and now, so you have documentation if you do decide to file in small claims or something like that.
Right. Thank you.
Oh, you're welcome. Okay. Let's see. Oh, it's one of the things, I think I'm on about 24. So sell off or return obsolete excess inventory. And if you are a company that actually has inventory or manufactures something and you've had something sitting there, move it along to somebody that might use it, that type of thing. Don't keep a whole lot of something that you're not selling in your stock, because you're counting it as inventory, but it's not really inventory that's going to sell. Utilize factoring or discount facilities to accelerate cash from sales. That is a good way. When you have accounts receivable, you can utilize factoring. It's an expensive method to do it, but sometimes you're making enough on it to utilize a factoring company. And then what that does is they pay you the money that is owed, and then they collect it from the person that or the company that had purchased it from you. Defer or restage all capital expenditures. That is to, and that's basically what we're talking about in all of this, is just look at what you got going. Look at what kind of expenditures. I just bought all this office furniture and now I'm having to move to a smaller location, kind of re-look at all of that and see whether you can get rid of some things or whether you need to purchase some things. Use alternative financing methods such as leasing. I recommend that to a lot of my clients that are, especially, I'm doing a lot of those food trucks and things like that, because they are able to get a better rate than I can get them. So they go ahead and get a leasing contract. And that's worked for a lot of my clients. Sometimes you can renegotiate bank fees to reduce charges. What I will tell you is that just because you go in and say, I'd like you to reduce my bank fees, isn't going to work. But if you were going to go in and say, well, you have my checking account and you have my savings account, and if I bring my Visa MasterCharge to you, would you consider, doing it as like a whole product, a group of products, and what would that cost? And I've seen some banks will work with you on that. I typically see that with like small credit unions and small community banks. It's not the bigger banks that are pretty much like, no, this is what we have, and this is, if you don't fit in this box, it's not going to happen. But I could be wrong, but I do better with the smaller banks. Seek to extend debt repayment periods with the bank. That goes into, that's if you're really having some issues, to see if you can extend the debt repayment period and give yourself a little bit of breathing room. Sometimes the banks will do a deferment, and what that means is maybe they'll defer 3 or 6 of your payments and they'll tack them on at the end of the loan, so it gives you a little bit of breathing room if that's something that you're looking at and you think you need. If I could just get, if I just didn't have to pay this for 3 months, I could really focus on getting these things out the door and sold, and then I'd be more comfortable being able to repay everything. And then my last slide on that is a lot of people think they have to have separate accounts for everything. I know for me, I have a personal account and then I have a business account, and that's it. Because and I'm sure you've found out there are fees to every account that we have. So this is 29 is consolidate your bank balances. So if you have, 4 different accounts for your business, do you really need those? If you do, fine. If not, it makes more sense to consolidate them. Then you're only having one bank fee, that kind of thing. Sell-offs, and I talked that, sell off surplus assets or make them productive. Enter into sale and leaseback arrangements for increased productivity. So what a leaseback is when I have a piece of equipment and someone wants to purchase it from me, but they can't quite, they can't pay for the whole thing up front. I could lease it to them and they could just make payments to me. So you could increase, you're not getting anything on this because it's a piece that isn't working for you. So you could get some income from it. Defer your dividend payments, raise additional equity. And that would be through, I always tell people, family, friends, a lot of people go out for, fintech lending. What I would say about that, and when I talk about that, that's the loans that you get you get in your inbox that say, you have $35,000 available to you right now, sign here and send it back. I just looked at a client and he had done that and he needed a piece of equipment. So it was a $25,000 loan and he was paying 25.4% interest. And so it's that kind of thing that I yes, take a look at it, but by no means just sign off on the dotted line. Make sure you read everything and you understand what is going to be what they're going to be doing. Let's see. Convert debt to equity. That would be if you have a loan to yourself from the business, convert it to equity and not show it as a debt that you're going to be repaying to yourself. And then make medium and short-term cash flow forecasts and update them regularly. And I can't say that enough. For me, it is just about making sure you are looking at this every chance you get to make, and even if you have to put it in your calendar and say, okay, every other Tuesday, I am going to take an hour and look at my financial statements and see what is going on, because we tend to be really, really good at what our business is, but it's like this kind of stuff seems to not be as, or not seem as important. And so I just really recommend, doing it as much as you can and understanding. So that leads me into, I have a next slide, which is, it talks about if you're, where did we go? There we go. Thank you, Gabby.
You're welcome.
I'm just
Loree,
like, did I blow it? Where am I?
no, it was me. And then also, Loree, I wanted to mention that we are about 5 minutes out. And I know that there are quite a few more slides left to go. If you're okay with running a little bit over, I'm fine.
Actually, yes, I have more slides, but the last, I only have through 22. So I just have 2 more slides. And then the rest of it is just information for everyone.
Okay, not a problem.
Yeah. I do know I talk a lot though. So this says still projecting negative cash flow. So if you still are, when you look at your numbers and you're just like, what am I missing? Maybe you get some, you need somebody else to look at it with you and see what is going on. And again, I would go right back to, the women's, I was going to call it the Women's Business Council, but that's not right. Gabby, I'm just going to say you just call Gabby and
Perfect.
Get an appointment and sit down with what you have and see if they can't help you with that. Because what you want to make sure is you're understanding your financial statements. What are they telling you? What are they saying? Are you not charging enough? Are you charging too much because you still have all of your product just sitting there? Understand your collateral options. You know, if I need to get a loan, I'm going to need to put up collateral. What does that look like? Understand your risks and costs for loan types. Like I said before, there are loans out there that you can get fairly easily, but be very careful with what you're looking at and understand. Again, I would take it to someone that you can get help with. I put down here no grants. A lot of people call me and they want a grant. They're really, I don't know of any grants out there for small businesses that want to start that were not COVID related. I mean, that there were grants at that point, but those are gone at this point. You know, shop around. You can talk to a couple of financial institutions, but be very careful because you don't want to fill out an application for each one of them because they will run your credit. And your credit should be highly personal to you and kept very close to the vest because that's what they're going to look at first. Do they pay their bills? And that's what your credit report's going to say. Not to say that, okay, well, I had a bankruptcy or I had some late pays because I was laid off of my job. There's a lot of things that are explainable, but just know that anyone that you're asking for money is going to run your credit. Let's see, shop around, get expert advice, SBDC, Gabby, the bank, and your bank. I mean, I have a relationship with my bankers so that I can, you know, you want to make sure that you're on a first name basis with them so that they can help you with that. So steps for getting ready for the loan. I would say business plan, including the profit plan we talked about. Know what you can afford. Study your financial statements. Check your credit report. And you can check your credit report for free. I know there's a few different organizations out there. Establish collateral options. And that would be like, well, I have my home that I'm paying on, and I have a couple $100,000 worth of equity in it. You know, am I willing to pledge that as collateral or what? And if not, know that the lender probably is going to want it. So just be aware of that. Show your equity contribution. If you can show that, okay, I came in with $30,000 and this is what I did with it. And that's my capital injection. That's my equity contribution. I've done all of that. And then research your financing options. So your loan package should have your business plan, business financial statements, personal financial statements, and personal and business tax returns.
Thank you, Loree. If anyone has any questions, please feel free to unmute your mics and ask your question.
And I hope I didn't scare you all. It's a lot to take in an hour, but you know, if you can, you know, look at what you're doing with your business and, you know, what kind of things you can take away from this and try and put your whole plan together. I also, at the very end, I have all of our different programs that Cal Coastal offers. And so if you, you know, want to, if you look at it, you go, oh, you don't have to pick the program. I will pick it when you come to me, if, you know, and let you know what looks the best for you. But that's where we are. Thank you. Look at how nice that looks.
I like your little transitions you've added in here. Now, Loree, are you fine with me sending out the presentation to all registrants?
Yes, that's fine.
Okay.
Absolutely.
And that one-page document that you had provided me with earlier, I think it's probably best for me to just send it to everyone electronically, if you're okay with that.
That's perfect. Yeah, it's just a different way. It's kind of all the same information. It's just in a different way to look at it. Yes,
Okay.
and that's my information. I'm pretty easy to catch, but I do work off site, so it's all, you can catch me pretty much anytime.
Okay, very nice. Let's see. Oh, wait a minute. We do
Oh.
have a couple of comments here in the chat. Let me
Okay,
see here.
okay.
I've got Anna that says thank you.
Oh, thank you.
Sure. I've got Chore Her saying, can we have a copy of the PowerPoint? And then obviously I
Okay.
just asked you. So she said, thank you. Great information.
Oh, good. I'm glad.
Yeah. Okay, well, that looks like that's all of the comments in the chat. So I would like to say thank you to Loree. This is an extremely informative presentation. For those of you who want more help with financing options for your small business, or if you want any additional advice on other subjects related to business, please contact us for no cost one-on-one consulting with one of our experts. And that right there will bring us, before I say we're closing out, I just want to let you all know that we have some really good workshops that are coming up. So please go to our website, which I've placed in the chat box, and take a look at our up and coming workshops. And if anyone needs any assistance with registering, please feel free to reach out to me. And that right there will bring us to the close of our workshop. Thank you again, Loree, and everyone who has attended.
Thank you. And
You're
if there's
very
anything else
welcome.
I can do, let me know.
I sure will.
Okay,
Okay, I hope everyone has a blessed evening, and we'll talk to you all soon.
great. Thank you.
You're welcome. Bye-bye.